What if I told you that with just a little knowledge and consistency, you could make your money work for you, even while you sleep? Stock investing is one of the most powerful ways to grow wealth, yet so many people are intimidated by it. In this video, I'll break it down step by step so you can start investing in the stock market with confidence, even if you're a complete beginner. Welcome to HowExpert Tip of the Day, where we bring you real-world tips from our how-to guides on all topics from A to Z. If you want to learn even more in-depth strategies, examples, and techniques on this topic, check out HowExpert Guide to Stock Investing, available at Amazon, Audible, Barnes & Noble, Google, Kobo, Apple, Spotify, and all major bookstores as an ebook, paperback, hardback, and audiobook. The stock market can feel like a complicated world of charts, numbers, and jargon, but at its core, it's simply a place where companies raise money by selling shares, and investors buy those shares to grow their wealth. By following a few clear steps, you can take control of your financial future, reduce your fears, and start benefiting from the market just like seasoned investors do. Step number 1, define your investment goals. Before you invest a single dollar, ask yourself, why are you investing? Is it for retirement, buying a home, paying for education, or simply building long-term wealth? Clear goals help determine your strategy. For example, if your goal is retirement in 30 years, you might focus on index funds or growth stocks. If you're looking for steady income, dividend-paying stocks may be a better choice. Your goals become the compass that guides every decision. Step number 2, understand the basics of stocks. A stock represents ownership in a company. When you buy a share, you literally own a piece of that business. If the company grows, your shares can increase in value, and you may receive dividends, regular payments from profits. For instance, owning shares of a company like Apple means you benefit when the company earns more and its stock price rises. Understanding this simple principle helps cut through the noise and makes investing less intimidating. Step number 3, build a strong financial foundation. Investing should never come at the expense of financial stability. Before you dive in, build an emergency fund with 3 to 6 months of expenses and pay off high-interest debt like credit cards. This way, you won't be forced to sell your stocks during a downturn to cover bills. For example, if your monthly expenses are $2,000, aim for at least $6,000 saved before putting serious money into the market. Stability gives you the freedom to invest without fear. Step number 4, choose your investment style. There are different approaches to stock investing. Some investors pick individual companies they believe will grow. Others prefer mutual funds or exchange-traded funds, ETFs, that spread money across many stocks at once. For beginners, index funds or ETFs are often recommended because they provide instant diversification and lower risk. For example, the S&P 500 Index Fund invests in 500 of the biggest companies in the U.S., giving you broad exposure without having to pick winners. Step number 5, start small and be consistent. You don't need thousands of dollars to start. Many brokerages allow you to invest with as little as $10 or even buy fractional shares. The key is consistency. For example, investing $200 every month into an index fund may not feel like much, but over decades, thanks to compound growth, it can grow into hundreds of thousands of dollars. Don't underestimate small beginnings. The power is in consistency over time. Step number 6, do your research before buying. If you decide to buy individual stocks, research is essential. Study a company's financial health, competitive advantage, and industry trends. Look at revenue growth, earnings, and debt levels. For example, if you're considering investing in a technology company, ask, are they profitable? Are they innovating? Are they expanding into new markets? Research doesn't guarantee success, but it dramatically improves your odds and reduces emotional decision-making. Step number 7, think long-term and avoid emotional decisions. The stock market moves up and down daily. Prices rise, fall, and sometimes crash. But historically, the market has always grown over the long term. That means patience pays. For instance, if you had invested $10,000 in the S&P 500 in 1980 and simply held on, it would be worth hundreds of thousands today. The key is not panicking when the market dips. Successful investors think in decades, not days. Imagine you open a brokerage account and buy $100 of an S&P 500 index fund. Over the years, the market grows at an average of around 7% annually. In 10 years, that $100 could grow to about $200. Now imagine you consistently invest $100 every month. In 10 years, you could have over $17,000 built simply by being consistent. This shows that investing is less about timing the market and more about time in the market. HowExpert Tip: automate your investments. The easiest way to stay consistent is to automate. Set up an automatic transfer from your bank account to your brokerage every month. This way, investing happens without you thinking about it, removing the temptation to wait for the right time. Automation builds discipline and keeps your investments growing in the background. When you follow these steps, stock investing transforms from something intimidating into a powerful wealth-building tool. You gain financial confidence, build assets over time, and take control of your future instead of leaving it to chance. Your challenge: open a brokerage account this week and make your first small investment, whether it's $20 in an index fund or $100 in a company you've researched. The hardest part is starting, and once you take that first step, you'll feel empowered to keep going. For even more tips, techniques, and practical examples on this topic, check out HowExpert Guide to Stock Investing, available at Amazon, Audible, Barnes & Noble, Google, Kobo, Apple, Spotify, and all major bookstores as an ebook, paperback, hardback, and audiobook. HowExpert publishes how-to guides on all topics from A to Z. Visit howexpert.com to learn more.